Welcome to Morning Coffee Thoughts with Chuck Oliver.
The number one thing boomers can do to protect retirement is removing retirement savings from the proposed retirement triple tax threat. In other words, enabling yourself to get off the retirement tightrope. And here are the three, folks, and it's not a matter of if, it's a matter of when. So please don't gamble your retirement on the outcome of upcoming elections, in particular this next year's. Here's why. Biden's picking up right where Obama left off. He is looking to repeal the step up in basis preferential tax treatment. So, in other words, an indefinite gain, taxable gain, will be passed on from generation to generation. Predictably, the Wall Street Journal's article this week projects that will predictably create a minimum of a 50% or higher tax to the next generation. Biden doesn't stop there. He wants to raise the capital gains tax rate to 40% for certain incomes and assets. And then lastly, Senator Wyden out of Oregon is proposing a tax on growth, not a tax on a gain, which would represent somebody actually selling something at a profit. Just the fact that an account went up in value. He's proposing a 20% growth tax, not a capital gain tax. That's on top of the growth tax. Folks, a great example that would be a client that we've worked with now for over a decade. And when we met Joan, who's now a widow, lost her husband about 3 years ago, she had become the government's perfect taxpayer under the current threats of taxation, not these added additional triple threats of taxation. You see, her requirement of distributions, because she did everything right, with the hope of saving enough to live off of and pass money on to her three sons, forces her requirement of distributions to push her into a higher marginal bracket, paying more tax as a result. Then, as an indirect result, 85% of her Social Security is being taxed because her requirement of distribution income exceeds the thresholds, especially now filing single. And her Medicare Part B and D premiums have been raised to supplement a broken program because she, on paper, looks to make too much money. Lastly, the government has passed what's called the Secure Act, and it's anything but securing you and I. It's going to tax her three sons in the form of about a 50% tax rate at best on any inherited IRAs that they receive. They're going to be forced to liquidate, Roth or regular IRA for that matter, in 10 years. See, folks, it doesn't have to be that way. And I want to teach you that, when the Wall Street Journal calls the income tax a Swiss Army knife of the U.S. tax system, they say it's an all-purpose policy tool for raising revenue, rewarding and punishing activities, and redirecting money between rich and poor. The system could change fundamentally if and when Democrats win the White House and Congress. Folks, right now it's projected at the end of 2017 that U.S. households are sitting on $3.8 trillion of unrealized gains in stocks, investment funds, plus real estate, private businesses, and even the inclusion of artwork. And Democrats are eager to tap the mountain of wealth to finance priorities such as expanding health insurance coverage, combating climate change, and aiding low-income households, But their ideas range from new rules on inherited assets, to growth of assets like Senator Ron Wyden out of Oregon, who wants to tax unrealized gains. Now, I want you to think about that. He's calling it a market-to-market system. Annual increases in the value of people's assets would be taxed as income, even if the assets aren't sold. Folks, let me leave you with one final thought. If there was ever a time to do strategic tax planning, to have no regrets, to pay the legal least amount of tax that we may foreseeably never see again, it would be under Trump and the Tax Cut and Jobs Act. And we know we have Trump for 19 and 20. We don't know the outcome of 2021, and don't gamble your retirement on it, because these triple tax threats are putting people's retirement on a tightrope. Don't leave your retirement on a tightrope, folks. Gain control. Disinherit the IRS from your IRAs. Learn how to protect yourself from the predictability of rising taxes, and protect not only more income for you, because in Joan's case, we freed up an extra $2,000 a month of unnecessary taxes going to the government that go back into her pocket, as well as making sure that none of her sons will pay $1 of inheritance tax. You've worked hard for your money. Make your money work hard for you, and get it out of the government's crosshairs.
Ready to learn more? Visit retirementprotected.com. That's retirementprotected.com.